If you're constantly getting faked out by price action, it's probably because you're trading without understanding momentum. Today, I'm going to break down my experience over 3 cycles of how I've learned to use the stochastic RSI and RSI across multiple time frames to monitor momentum shifts, time entries, and avoid market traps. A lot of traders are using RSI divergence to catch tops and bottoms in crypto. Most of them are getting wrecked. In this lesson, I'm going to break down exactly why I don't use RSI divergence to predict reversals and why momentum and trend are all I really care about. To get things started, we're going to cover RSI. So the RSI, or also known as the Relative Strength Index, measures whether an asset is overbought or oversold. It moves on a scale from 0 to 100. Over 70 means overbought, under 30 means oversold. It's an oscillator. So, oscillators are down here on the screen. Your indicators typically here on the chart itself. So here's the RSI. This is the name of the oscillator. So here we have it now. Typically above 50 supports bullish continuation, and then below 50 shows weakness. So as you can see here, 50 is right in the middle. And then up here at this dotted line, we have 70. So above 70 is overbought. And then we have 30 down here, and below 30 is oversold. All right, next we're going to talk about what is RSI divergence and why traders use it. So it's when price makes a higher high, but RSI makes a lower low, or vice versa. Traders see this as a potential early signal of a trend reversal. In theory, divergence shows that momentum is slowing, even though price is still moving. That's why many people jump in early expecting a reversal. But here's why I don't trade RSI divergence. It's a reversal strategy, and reversal strategies are about predicting when a trend might end. And also in crypto, momentum is king. Trends don't just die quietly. Crypto is very volatile. There's usually traps, and people are trying to fade them, but you just get price action to explode again. All right, now we're going to cover an example of divergence. We've got Bitcoin brought up here on the 30-minute time frame. Here we have an example of bearish divergence. So we've got Bitcoin rising, and we've got the RSI selling off. And at the same time, Bitcoin's made a high here and a higher high here. RSI's made a high here, but a lower high here. So again, we've got Bitcoin showing price action going up, but RSI is going down, showing weakness or divergence. So that's bearish divergence. Now, some traders like to trade that or use that for their trading strategy, but I don't take much of it into account. I like to trade trends. So here we've been in a strong trend for a few days going up. Trying to sell here, go down here and take profit. So some more intermediate to advanced trade. All right, now we're going to cover the stochastic RSI. It's a momentum oscillator based on RSI, but it's faster, more sensitive, and perfect for timing. Now, here is the oscillator. This is the one I use. Now, here's the way most retail traders use it. So it's very similar to the RSI. We've got a 50 level. We've got an 80 that's representing being overbought. And then we have a 20 representing it being in oversold territory. Whereas the RSI, 70 and 30 is where the strength and weakness is measured. But for the stochastic RSI, a lot of retail traders will see this, and then once the stochastic RSI gets up here, most people start getting bearish, looking for reversals. And then they also look for double bottoms, which I'll point out when we come across them. And then if the stochastic RSI crosses up while the RSI is still bearish, that's an early warning of a shift. So, if we're down like here for a while, in oversold territory, And then also the RSI is extremely oversold also on the 30-minute time frame. And once we see it pop up, that's when, a lot of retail traders will think, okay, here's the time to, go all in. But I'm going to break it down to how I use it and measure momentum. All right, here's my process: multi-timeframe momentum reading. This is where it all comes together. So first, you want to confirm a strong down or upward trend. It needs to be local. That's why I say strong. It shouldn't be a very minute or short-term trend. Second thing is, you want, for the larger time frames, I use the 4-hour to the daily. So I use the 4-hour, the 6-hour, the 12-hour, and the daily. And I use them to check the overall trend and whether the momentum is building or fading. The lower time frames I focus on for entries. So the rule is, don't counter trade the trend, unless you really can't help it, or you're experienced, or you're wanting to trade you're wanting to trade pro. Unless the higher time frame momentum tells you it's weakening, that's where you avoid fake outs and failed reversals. All right, guys, we're still on the 30-minute for Bitcoin. We have a strong uptrend here with a lot of momentum. Quick note, guys, the stochastic RSI is to measure momentum, and the RSI is to pretty much measure strength of weakness, or being overbought or oversold. So I'm going to navigate through some higher time frames, and I want you to pay attention to what I'm going to cover over the RSI and stochastic RSI. So here we have the monthly chart, and what can we take away from this? The stochastic RSI has been showing weakness, while the relative strength index has been showing more strength. See, we went down, but we only went down to about 60, 63. Now, we can see that we have strong bearish divergence. Bitcoin made a high and a higher high here, whereas on the stochastic RSI, we made a low and a lower low. And this is on the monthly, so this is very, very big bearish divergence. But if you're going to trade this, this is like a one trade setup, right? You see the divergence, you get into your short up here at the top, and then, you're not going to exit right at the very bottom, so maybe you're going to exit here. Okay, that's a 22% move over about 4 months, which is good. You maybe add in a little leverage into that, but in this 4 months, if you're a very experienced trader, there would have been a lot of opportunity cost because we had a lot of volatility. So probably could have done better versus being in this one trade. So that's why I prefer trading momentum over divergence with the RSI. Now we go to the weekly. We see that we've been in this descending channel. The stochastic RSI has been suppressed for a while, a couple months, while the relative strength index has bottomed and has been curling up. We see that the stochastic has popped up above that 20. So it looks like it's starting to front run the RSI or breakout first. This is the other thing I mentioned that a lot of retail traders trade, which is fine. But again, this is just like a one trade setup, right? You're waiting for this to happen or play out. You get in here, and then you stay in for, the measured move, which could take 2, 3, 4 months to play out. But this is pretty bullish. Like the last time this happened, we were over here. We broke out. So we broke out here on the 23rd of September for the stochastic, but the RSI didn't break out until the 11th, so like 2 weeks later. So this is a perfect example of stochastic breaking out first and showing strength before the RSI does. And then we had a run up. So these things don't play out too often, once or twice a year. On the daily, keep in mind, guys, this is the trend that we're checking out. So you can see on the stochastic RSI, we've managed to stay up being at these very high levels for April 12th, so almost 2 weeks. And the RSI just started joining us or coming up. So we can stay up here a long time. A lot of novice traders, they'll see us get up here and they'll think just because we get up here, they'll start looking for the reversal. They'll start looking for us to roll over, especially when it's on the higher time frames and the low time frames. But we can stay up here for weeks. So an example of what a lot of retail traders are looking for, they're looking for this move right here, right? They're looking for us to come up here and then roll over and drop like we did here. But that's what you do when you're trading momentum in a downtrend, right? We're not in a downtrend right now, so we're in an uptrend. So that is the daily. On the 12-hour, we just got up here. We have a little flash of green, which I'll cover a bit later in this video, but this represents being extremely overbought. We're on the 12-hour. We go to the 6-hour, holding very strong up here, showing a lot of signs of being overbought on the 6-hour. We go to the 4-hour. Okay, we're starting to roll over a little bit. We got signs of being extremely overbought. All right, here on the 2-hour, we have some bearish divergence playing out, right? So, and let's go to the 1-hour. Okay, so if you look at this, right, you could have traded this two ways. You could have traded the RSI with divergence or momentum. On the 1-hour, right about here, you see that Bitcoin made a high and a higher high here. The stochastic RSI made a high, a lower high, and an even lower high. But at this point in time, it showed pretty much some strong bearish divergence. The issue with that is we're in a strong trend. Had you looked at the time frames in front of us, or the higher time frames, you can see that we have a lot of strength, a lot of momentum. So yeah, I wouldn't be trying to trade against momentum. I wouldn't be trying to trade against the trend. You get a lot of novice traders, they look at the stochastic RSI and they see us up here, or even like over here, they see us up here for a while. They see that we're being extremely overbought on the lower time frames, like the hour and lower. They get excited and start trying to time the trend like reversing, and they get trapped. So this is not what you want to do. Let's go back to a point in time a bit earlier in this trend. So we're gonna go right here, 22nd at 6:30. I have another chart which we're gonna 22nd at 6:30. Okay. Okay, on this chart, it's Bitcoin on the 30-minute. I just have a trend line drawn. We have our vector candles and we have our liquidations. Now, we go to the 30-minute, and this is another common mistake I see novice traders make. So at this point in time, it's the same trend. We're just a couple days earlier in the move. So see we're coming up here, we're up here on the 2-hour. You go to the 4-hour though, we're showing a lot of strength in the momentum. We're holding up here. We're holding up here. The 6 hour is coming up, so, along with the RSI. On the 12 hour, we're coming up. All the time frames we're coming up. And on the daily, we're already up here and we've been up here. So, you know, I take that into account. What does it tell me? That tells me, hey, the momentum in this trend is very strong. Now I want to look at, the market structure and possible other signs that could tell me, hey, we want to go up versus down. So we look here at our highly over leveraged traders. We're on the 30-minute, right? And we see at this point in time, there's a lot of them below us, right? There's not that many above us. We see market maker stepped up in here. He pushed us up here. We broke out. Then retail has, came in. We take a look at our vector candles. So these are both things I've covered in the previous lessons. So feel free to watch those to get more familiar. But if you're watching this video, you should have already watched the previous lessons. So here we have a stopping volume candle here. We've got a stopping volume candle here, right on this trend line. So, okay, I see market maker has invested in breaking us out here. He's invested in to holding this move. And as we've pulled back here, he's maintained coming in here with this volume candle, coming in here at these two touch points so that we have a trend we could establish. So that tells me he's favoring us going up, right? So let's look at, so here we don't have too many liquidations, right? These purple ones are 50xers, the blue are 25. There's not that many above us, but you have to navigate through the different time frames to see how many leverage traders there are. Yeah, we still have far more to the bottom. There's a lot more people hitting this with 100x below us. And yeah, 5 minutes pretty balanced. 1 minute. You're down on the 1 minute, we're just more looking at the 100x. Yeah, but it's still pretty balanced. So now what we're going to do is we're going to go to the heat map. So we go to the heat map. And let's see that I have this brought up at the right point in time. So it's 22nd at 6 a.m. Just going to refresh this, make it easier. So we're on the liquidation heat map for Bitcoin, and we're on the 3-day. So, all right, so 22nd at 6:30, right? This is right here, right? So, okay, guys, so right here on the liquidation heat map, I covered this in the previous lesson about liquidity heat maps, but it's just a quick note. So when you see these liquidations behind the candles or price action, these are liquidation zones that have already been hit. These people have already been liquidated, versus the ones that are in front of the candles are valid or existing liquidation zones. So their liquidity is up for grabs still, but these guys, they've already been hit. So now that this is so far behind this point in time, this is valid liquidity, right? These are valid liquidation zones. Over here, this is showing what it had in the past. So if you see the discrepancy, like right here, 16.55 million, I hover over here. Now there's about 111. So yeah, so I'm going to zoom in here just to make it a little bit more easier to see to someone that hasn't spent much time looking at these heat maps. Okay, so here we are right around 6:30 on the 22nd of April. And we look at the liquidity on the heat map, right? And below us, there's not really much liquidity to go down, right? I'm on the 3-day. There's not many. The liquidity that's below us, these are just high leveraged traders, right? These are the 100xers, the 50xers, and the 25xers, right? These guys, they don't account for all the money in the market right now. These are mostly, retail traders. Whereas, this is more institutions and big players. So looking at this, we can say with confidence that the incentive for market makers to definitely go up. As of above us, we have about, $1 billion in liquidations, whereas below us, you're looking at maybe 100, 200 million. So there's a strong imbalance, right? Now this is on the 3-day. There's different time frames, but I'm not going to go into detail. But yeah, so just looking at those things, take into consideration where the liquidity's at, the liquidations. We have a trend line. We have very strong momentum on the higher time frames. I would not be looking for a short here. I would be looking at longing off of this trend line. That's what, I'd be doing. And then as far as your stop loss, I don't know the ATR of Bitcoin right now, the average trade range, but let's just say it's 1%. So that's the average price. It fluctuates on average. So let's say I go 2 ATR. So I'm going to go 2% below. So, had you got in around here, you might go 2% is pretty aggressive, but let's say I might go 1%, right? I might go right here. The reason I would I would put my stop loss right here is because it's right below all these 100x leverages, which usually short term, if we have a retracement, they just wipe out those guys and then we come back up. The daily open at this point in time is right here. And then also I'd want to be looking at my moving averages, which I'm going to cover in another lesson. But right around here is where I would be looking for a long for continuing this move up. Now let's say when you saw a market maker come in here and you saw this move and you saw this trend line. So let's just say you happen to get in here, right? So maybe you're already in the trade. You can use what I'm covering with the stochastic RSI and the RSI to gauge or measure the strength of if you wanted to stay in your trade for potential higher targets, right? So that's how I use the stochastic RSI when it comes to momentum. Now, and to take things a little further, let's say I've decided that the probability of us going higher is higher versus us going lower. So the odds of us going higher are better than us going lower. So what I would look for now is I would look on these very low time frames for when we're being oversold, right? So when we've retraced possibly the deepest we're going to retrace before favoring what the higher time frames are showing, which are strength and, staying up here at the top. So doing that, I'll usually look at the 30-minute or the 15-minute. So we go here. Okay. We see the last time we were bottomed out was around here at 0, right? So this is still a little early for confirming the continuation of this trend, but let's say after you saw us make a higher high, so it's like, hey, something's different about this move, there's strength in it. The next time was at this point in time, but when I'm looking for confirmation on these shorter time frames, you want to look at ideally the stochastic RSI bottoming and the RSI showing strength, staying up, right? So what I mean by that is if we're in an uptrend and you confirm that we're moving higher, the probability is higher for us going up on the higher time frames. And you're looking for your entry on the smaller time frame. I'm looking for the stochastic RSI to be sold off and the RSI being ideally a little bit higher, right? If it's also sold off here at the bottom, that's fine, but that's not what we want to look for, because when the RSI and the stochastic RSI are both oversold and showing weakness, that's like that's a bad sign. That's showing extreme weakness, and that this may continue to play out. Versus when we had an example in the 30-minute, when we bottom out on the, let's say the here's a perfect example. We dropped, had a retracement, we bottomed out on the stochastic RSI, but we're still here up at the 50 for the RSI, right? We're not all the way down at 30 or lower. So that's showing strength. So again, if I've confirmed on the higher time frames, the 4-hour, 6-hour, 12-hour daily, that momentum's very strong, and I'm currently looking for entries on the shorter time frames, this is what I'm looking for. I'm looking for us to come down on the stochastic RSI while the RSI is higher, showing us that we've bottomed before continuing to higher prices. Now, if not, the next thing that's ideal is that the stochastic RSI has bottomed along with the RSI, you know, on the 15-minute. Once you see this stuff start happening on the 1 hour, that's not good. That's a bad sign. You know, that's translating to, hey, now the 2 hour and the 4 hour are probably going to be doing that, you know, in the next 6 to 12 to 18 hours. So it's something with experience and time, you'll understand and you'll see a lot more. Again, this is 3 cycles of experience and thousands of hours of watching these two oscillators. These are the two main oscillators I've used since I traded in my first cycle in 2017. So I spent a lot of time watching these. The last thing I want to cover in this, for this upward trend and measuring the momentum, is this flashy green signal, which signifies that the asset is extremely overbought. Some people, they'll see this on the lower time frames and they'll think, oh, this is it, that we're topped out, we're going to reverse, it's time to come back down, which is not true. So this is another way I found measuring momentum, and it often plays out. So I'm going to look at when we first started seeing signs of being extremely overbought on the 6 hour. So we come down here. Okay. Now, okay, we can't quite see it there. So probably right here. Yeah. Okay. Perfect. Now, I'm looking at these time frames, right? Let's go down to the 30-minute. Okay. So let's say seeing this crazy move, right? What the heck's going on? We're up 8, almost 9% in 2.5 days. And thinking, hey, how much more can this keep going, right? But again, you just look at your liquidity heat map and you take everything into account, right? The bigger picture. And you look at the momentum. So a lot of novice traders, they'll see this and they'll think it's time to, we can only go so much higher before coming down, right? They're thinking best case that we'll do this for a while and then finally come down. Right? That's kind of what we saw right here. Saw we showed signs of being extremely overbought. We came up here, stochastic came down, so did RSI. We showed our bearish divergence over here, and then finally we had a little bit of retracement, very short-lived retracement. Right? They'll get into that short hoping that this is the the end of the move, right? They're hoping that this is going to happen. We're going to retrace to where the breakout started from. Now, the way you can give yourself confirmation or more confidence if price is going to continue to trend up is you look again at the higher time frame. So we see we have strong signs of being overbought here on the RSI. So now we're going to go to the 1 hour. Okay, we're also showing signs of being overbought, which is not ideal. You know, if you're looking for higher, if you're looking for, if you're a novice trader and you're trying to see if you're wanting price to come down, you might be looking at that and think, oh, that's good, but it's not because it's showing a lot of strength. And I'll show you why. So again, we have the stochastic RSI up here still trending up. We're showing signs of being overbought. We go to the 4 hour, same thing. Stochastics all the way up here, maintaining strength. Overbought. 6 hour, you see how we were just starting to flash that sign of being overbought? I've spent thousands of hours watching these two oscillators, and I've seen when this happens, right when we just barely flash green, and all these higher time frames are showing strong strength. 8 to 9 out of 10 times, I'd say 9 out of 10 times, the move continues higher. That's when you just got to look at your market structure and other factors to determine potentially how much higher, you know, we could go. But 9 out of 10 times the move continues. So even if we may have a retracement, we usually continue. So I see that in the 6 hour, right? It's like, oh man, I'm starting to see that little flash and everything's still showing strength, right? So I'll go to the 12 hour. Man, the 12 hour, we're up here. The RSI is up here, right? We're on the daily. It's up here. I'm not looking to short this, right? I'm really not. You're trading, we want to trade with the trend, go to the smaller time frames, looking to bottom out, looking for the strongest point of weakness before the trend continues. That's what you want to do. That's how you would measure your momentum in a local trend like this. All right, before I move on to the downtrend example, I want to cover more over these bright areas on the RSI. So as mentioned earlier, these bright green and red areas, they're just visual alerts pretty much to signify, hey, like extremely strongly overbought. All right, so when the RSI turns bright green at the top, you know, this happens when the RSI value is over 70, sometimes 80, depending on your settings, if they're on default or not. Now, I made some notes to help, you know, use this in correlation with measuring how momentum is and if price is likely to continue going up for us showing signs of maintaining strength with stochastic RSI while being at the same time overbought. So the first thing you want to do is confirm the trend, right? You need to check the trend and confirm that we're in a strong upward trend. You know, none of this applies if we're not in a strong trend. You know, and we're referring to the bright green, so this refers to being in an upward trend, you know, being at multiple point in times where you get continuously you're being overbought. Now, another thing to take note is all this only applies if we're showing signs of being overbought and the stochastic RSI is holding strength at these hundreds on the higher time frames. So if we're looking right now on the 30-minute and we're trying to measure, hey, we're seeing signs of being overbought, is it likely that price is going to continue holding the current price before going higher, or are we going to retrace? That's when you go to your higher time frames and you want to see that stochastic RSI is holding strength up here above 80, 90, and the RSI is trending up, or we're holding strength also up here. Okay, so when looking at the 12-hour daily and seeing the signal pop up that we're extremely overbought, What it means is that buying momentum is very strong and it's usually very unsustainable. So if we're seeing signs of being overbought on the 12-hour and daily, it means that the lower time frames, like from the 6, the 4, the 2, all the way down to the 15, they've already had their period of time of being in an overbought state. And now that we're seeing it on the 12-hour daily, it's likely that we need to retrace or reverse. So at any point in time, when you're trying to find when the trend is potentially losing strength, this is what you want to look at. You want to see when we're overbought on this 12-hour and daily. It's like, hey, in the next 12 to 36 hours, we should be seeing a pretty strong pullback, a retracement, or maybe even a reversal. Now, when we see the signal of being overbought on the 2-hour, the 4-hour, and the 6-hour, it means buying momentum is very strong. So to determine if the buying momentum is sustainable while being overbought on these time frames, that's when you go, like I did in the example, you go to the higher time frame. You go to the 12-hour and daily, see if we're already up here at these high levels and the RSI is trending upwards. That confirms if the momentum is still pretty strong and looking like it's going to maintain its strength overall. If you look at the higher time frames and we're overbought on the RSI and we're already rolling over, we have already dipped below this 80 like we did here, it means that the move is meeting its end as far as, short terms, potentially midterm. We're seeing, you're going to likely see a very decent sized retracement or pullback. Again, if not reversal. Now, when I see us being overbought on the 1 minute to 30 minute and 1 hour, it means price is extended and more than likely you're seeing a pullback or a retracement of some short. Now, because it is on the lower time frames, that move is short-lived, right? So we're in the 30-minute now, and if we look at this point in time when we got overbought, we went down and then we had some divergence, right? We pulled back. This was very short-lived. So had you been looking at the higher time frames, right, using this process, seeing that momentum on these higher time frames was still showing strength and continuation going up, as far as on the stochastic RSI and the RSI, this is when you're looking for then you go to the smaller time frames and you're looking for your signs of being oversold, because you see on the higher time frames we're very strong and showing a lot of strength, right? So on these lower time frames, once they get oversold, what are they going to do? They're going to return to the state of the current momentum on the higher time frames, right? If we're showing extreme strength on the 6-hour and the daily, and on the 30-minute we get sold off, that's a pretty good place to bounce from. And that's when you want to put further confirmations and signals, whether it's your market structure, whether that's sentiment, news coming out, maybe it's off of key Fibonacci levels, golden pockets, anything like that. Those are the things you want to use partnered up with measuring your momentum and seeing on the shorter time frames, hey, we're approaching that oversold point. On the larger time frames, trend is still going up, momentum is still going up, maintaining its strength. That's when you want to look for all those things to coincide and line up together to enter into that long. All right, so this covers, being overbought in regards to being in an upward trend. All right, now we're going to cover the signal for being extremely oversold on the relative strength index. So we get the signal, turns bright red. First thing you're going to do is confirm your downtrend, confirm we are in a strong downtrend, because if not, this does not apply. So it's something you should already have confirmed. You're going to look at your 12-hour and 1-day time frame, and on those higher time frames, when you see the signal, it means that the selling momentum is extremely strong, and sooner or later price is going to reverse, if not correct, pretty strongly. Now, when you see it on the 2-hour, 4-hour, and 6-hour, it means selling momentum is very strong, and determine if price is going to continue moving the same direction of the selling momentum. You look at your higher time frames. If you see on the higher time frames, we're holding the momentum of being oversold, then it means the continuation of the selling strength is going to hold. Now, when you see it on the smaller time frames, it means that you're going to see this bounce or retracement, sooner or later. Now, when you're looking at these time frames and you're, looking at that signal of being in extremely oversold territory, this plays out more so when we're in a bear market or we're having bear rallies in a bull market. That other example I showed you, played out pretty well because, it's still, I guess, an opinion, but soon I think it'll be confirmed. We're still in a bull market. I believe we're about to have a bull rally. Okay, now I'm going to go over the example for the downward trend and the multi-time frame confirmations for momentum. All right, so we're going to use this downward trend. So this is a descending channel that was established right around February 21st. So we're going to go back to that point in time. So we come here. We don't have this downward trend line because we don't have multiple touch points. All right, so this is still a little bit questionable if this exists, so let's go just a little further in time. Okay, so right here, we could establish this trend line that's acting as resistance. And we're going to now look at our higher time frames. So on the daily, the stochastic RSI is, trending up while the stochastic RSI has been staying down here right around these levels of 40. So nothing out of the ordinary. Now on the 12-hour, pretty over here, overbought. And the 6-hour showing signs of being overbought still, turning over. So I'm not seeing anything here that really, sticks out to there being overwhelming selling pressure or downward momentum. So I'm going to let this play out a little bit more. I'm going to go to the lower time frames. That way this play out just a little bit slower. So this is a 2-hour. We already know price is going to go down, but I want to see when we're first getting strong signs of downward momentum being very strong. So we're looking at signs of being extremely oversold to get that signal on the RSI, or for our stochastic to be at the bottom and also the RSI to be at the bottom and maintaining that state of being oversold. Okay, so right here, we just got our first sign of being extremely oversold on the 12-hour. So what we're going to do now is look at the lower time frames. Okay, so on these lower time frames, we see that briefly we were oversold in extreme oversold territory, just briefly. So when the signal is in a smaller area, that just means we were oversold by a little bit, but not a lot. And then if it's a much larger area, That just means the strength of being oversold was that much stronger. So we go to the 30-minute. See, this area is a little bit bigger and we're in a higher time frame. So trending down, right? We're in a strong downtrend right now. And we're getting signs of being oversold, and we're going to see, okay, is this movie going to continue? All right, now based on the notes for the extremely oversold signal, we're trying to look for if on the higher time frames we're seeing signs of being oversold, and if it seems like momentum is going to continue to the downside. So here on the 6-hour, we're holding these levels being down here, and on the RSI we're coming down. So it's not looking that great for the 6-hour, as in, you know, for Bitcoin, it's looking like we could be going down a little bit more. You look at the higher time frames, the 12-hour, you know, we're still going down. The daily, there's still room to go down on the daily. What we're looking for is if we start approaching to being extremely oversold on the 6-hour now, because if we start to see it now in the 6-hour, and we see it even much stronger in the 4-hour, that means it's probably going to happen on the 12-hour too, which means we're going to have a continuation of, yeah, selling pressure. So let's see how things play out. Okay, so yeah, we sell off. Now we see we're starting to be extremely oversold. The 4-hour. Okay, now this 6-hour, I don't know if you can see it, but we are in the extremely oversold territory. So as I mentioned earlier, once you see this little flash that's lighting up, these are very large time frames, right? This is a 6-hour. So this takes time to play out. So it's not like we're just gonna get this huge bounce right back up or V-shaped recovery. More so likely something like this is likely to happen before we, you know, bounce out. We're more likely to form a W and come out of here. So you can also look at the stochastic RSI, and if this is staying down here, that does not look good. You know, let's say the RSI was in its same state, but already the stochastic was curling up. Okay, that would mean the point in time for this to correct or reverse is likely to happen a lot sooner than later. Whereas this is holding down here, you know, maintaining the momentum of selling. Yeah, that's not looking good. And we look at our 12-hour, okay, oversold. The RSI hasn't completely dropped, right? This purple line can flip up here, and this can still go up, like we see here. So we went down on this line, but then only to come right back up before trending up. Once you see that we're already coming down and the RSI is staying down, that's more so more confirmation. Okay, so on the 12-hour, the daily, it's still looking like we could potentially reverse at that point. But at the 6-hour, we know that it's likely we're going to continue going to that oversold territory to get that signal. So now that we know this and price is going to continue going down most likely, had you got into a position, a short or sell somewhere up here, this momentum could give you a sign or a signal to hold for the continuation of the move to try to maximize your profit and hold your trade for as long as you can, you know, for the biggest gain. Or you could look for a trade setup. So at this point in time, if I was to look for a trade setup, if I generally thought, hey, we might get a bounce, but we're probably going to continue trending down. So what would I look for? So you're looking now, it's the opposite of when we were looking for an upward trend. So now that we're in a downward trend, You're looking for, on these smaller time frames, when we've approached being extremely oversold, you're looking for the stochastic to come up and top out. That means like our momentum strength for going up has topped out and is going to roll over. And you're looking for the RSI ideally to stay below the 48. Because if we, okay, here's an example. So the 15-minute time frame, right? We became oversold. The price just came up barely up here, right? It didn't even come up that high, much higher. It came up 1.7%. But the momentum for the stochastic RSI came all the way up to 100. Meanwhile, this RSI in the 14, it only came up to these levels around 48 before rolling over, right? So that's signifying that the strength is still going much down. Had this momentum for the stochastic RSI trended up and the RSI went up and then it was staying up, that would be more so a sign of, hey, we're going to correct it a little bit more before going down, or potentially, reverse. So this is what you want to be looking for, exactly this. Oversold territory, stochastic RSI gets topped out, it uses all the momentum it can to just come up or push up as high as it can before bears come in and overwhelm, the price and pressure again to bring it back down. So that's what we'd be looking for at this time. So on the 30-minute, let's look for that right now since we still have time to trend down. Typically I look for it on the 15-minute, but since we already just saw it play out, I want to see if we see it happen on the 30-minute. Okay, so all right, at this point in time, we're kind of getting that move. So what we want to see is the stochastic max out here while the RSI doesn't come all the way up, and only, if it comes all the way up, it can still roll over, but ideally we just want to see this not show as little strength as possible pretty much while the momentum tops out. So now let's go to our higher time frames, see what they're showing. Okay, the 1 hour looks like it's wanting to bounce up and do what I mentioned earlier on the 15 or 30-minute, which when you start to see this happen on the larger time frames, you can get much stronger bounces. So we're showing this is starting to curl up, Okay, but here on the 4 hour, we're still wanting to, we're still trending in that extremely oversold territory. Got the 6 hour, it's just barely signaling. 12 hour, daily still has room to go down. So how the daily has still room to go down, and you're this early in the move, as far as the move going down, that's what you want to see. If this was already bottomed out on the daily on the highest time frame, and it wasn't showing signs of being extremely oversold, then that would tell me, hey, it's more likely we may get our move, we may get the correction or reversal sooner than expected. And then you just look at the weekly, right? The weekly is still oversold, then that means the daily can do the same thing, can follow the same route. All right, so now we're going to go back to our 30-minute, and let's just continue watching that, see how that plays out. All right, so this is already what we're wanting to see, exactly what I talked about. So we see that the stochastic RSI, it pushes as hard as it can. Meanwhile, this RSI, it doesn't go up that high before already starting to curl down. So this is still showing, this trend is still showing a lot of weakness. Now if you go to the 1 hour, right? Oh, that's a very strong weakness. So when you see on the 1 hour, you see this happening. This is very rare. Like we have, we just are coming out of an extremely sold territory, and then we are having this bounce on the stochastic RSI, already approaching being maxed out, while this isn't even coming up. That tells me 8 or 9 out of 10 times we want to come back down. This is one of the patterns I don't trade again as often, that I mentioned at the beginning of this video. So this is that double bottom. So some retail traders, they'll look for the double bottom for that flash or that signal, because it just means like we're extremely oversold, which it's not a bad setup on a higher time frame, but it's just in a strong trend, you know, you can continue going down, which is what, yeah, we do here. So let me look at the 2 hour now. Okay, so go to our 30-minute, right? All right, we come back down now. We made a lower low, so let's look at our higher time frames. All right, the 6 hour, we're starting to grab flash even more. The 12 hour, we just barely started flashing. So I'll zoom in here so you can see that. You see it? You might not be able to see it from back this zoomed out, but like I said, I've been watching this thing for a long time, so it's a lot easier for me to spot or see. But now that we see that flash barely happening, again, this is a 12-hour time frame. Right, downward momentum is going to be sustained. So when I say sustained, that doesn't mean we have to go down, you know, forever, but it just means that we're likely to either go down more, or we're likely to chop here and stay close to these levels before maybe going up. It means pretty much we still need time to cool off a little bit before buyers can come back in. So we're gonna let this continue playing out now. See what happens on the 2 hour. Oh wow, so the same thing happens on the 2 hour that just happened on the 1 hour. So these things are very rare. These are like moves you'll typically see in at the end of a bear market or in the middle of a bear market. So pretty much we're very oversold on the 2 hour, which is a large time frame. RSI comes up, maxes out, but this RSI doesn't budge, right? It's pretty much saying, hey, I'm not ready to come back up. I need to stay down still longer. And you have to be careful too, because at this point, look, the RSI is maintaining its strength up here, right? Just because it came up here and we're down here, it doesn't mean that this can't continue to hold its strength and give the RSI time to cool off and come back up. And that's when you see the reversal or correction happen. So you have to be cautious. So you just want to look again at your lower time frames too. You want to see what your lower time frames are doing at that point, right? It's like, hey, if we're at the 2 hour and we're trying to see if that is going to play out, well, then I would go to my lower time frames. And if, let's say we saw the RSI was up here and this stochastic was up here on the 30-minute, I'm like, oh shoot, like this is the lower time frames are starting to show strength, like on the 30-minute and 1 hour. And if that's showing strength on the 30-minute and 1 hour, that means, hey, that strength's going to continue to roll over into the larger time frame, like here. All right, so we end up taking a dip and make another lower low. Let's go to our higher time frames. All right, so that 12-hour, we're at 16. Still got room to go down, but again, we're holding you know, pretty much the very bottom of the stochastic. And we go to our higher time frames. Daily still trending down. So yeah, we're just continuing to see lower prices. So all right, here, this looks like some people may think we're actually correcting here. Let's see what the lower time frames are doing. Okay, so again, so you're seeing the 1 hour start to stay up here. RSI is still coming up. It's curling over, but this is not ideal if you want to see the price continue to go down. All right, so price is still, let's see, going down. So you see here, guys, I know this is a lot, throwing y'all, but these are things, again, I've seen played time and time out again. So we're seeing that the RSI, this RSI and stochastic RSI is starting to come up more often than not on the higher time frames too, right? It's like stochastic is trending up. This is not so much for the RSI, but yeah, it's not. On the smaller time frames we are, but yeah, we're still not. And also it's the same thing in conjunction, like you want to look at your liquidity levels, your market structure. You want to take into account a lot of other things, but this is strictly just for momentum, right? So now we're at 79 right now. We're going to go over some things. This was a pretty steep, volatile, sharp drop, but novice traders, again, I want to point out. So right here, we see that we are extremely oversold, and it looks like we're curling up and coming out of this, right? So a lot of traders right here, I'm telling you, a lot of novice traders, they got trapped here, and we're in extreme drawdown. You're talking like 11%. Most people, they're not going to survive that. They're gonna take an L, or if they're trying to hold the drawdown, they'll probably get liquidated. And that's why, again, you want to trade with the trend. We're not looking to trade against the trend until there's confirmation. So in the 2 hour back here, had you been looking for if price was going to continue down or not? We're at all you have to do is go back and look at your higher time frames. And again, at this point in time, we were approaching being extremely oversold. We were flashing that sign. If you don't see the flash, the signal, then you can have a little bit more confidence. Maybe we're going to see a bounce, right? But once you see the signal flash, it takes time for the rest of it to play out. 90% of the time, it's gonna show at least like about this much, right? It might not show this. This is a lot, but once you see this little flash, it's usually at least one more bar or two more bars of the signal that are going to be continued, and that means that the state of being oversold is going to continue still more. This is a 12-hour time frame, so that means a whole nother 24 hours, 12 to 24 hours. These are signs of how you can avoid trying to jump into this move too early to try to long it or catch a falling knife, or hold your profits, hold your trades for larger profits, hold them longer. All right, so now we're going to see how low this goes. Okay, so we went down to 78 here. Let's look at the larger time frames. So on the 12-hour, right, we're extremely oversold. On the daily, we're extremely oversold. So if you look at the notes, when you see this little flash, usually you want to give it one more bar at least before price is gonna correct or bounce. So had you seen the flash here, we're on the daily, right here you're at 84K, you would have gotten a little too early. But if you waited one more bar, you would have gotten around the same price, and then you waited two more bars, you would have, you would have got in at the bottom. So now let's look at the lower time frames. So lower time frames, you're starting to see what you want to see. Seeing V-shaped recovery, you're seeing being oversold, coming all the way up, showing overbought strength, and the stochastic RSI topping out. That's what you want to see. And you're seeing it happen on the 1 hour too, pretty much. You go to the 2 hour, it's playing out like that on the 1 hour, 30 minute. It's likely to, and we're very close, so you could say it's likely to happen on the 2 hour. You go to the 4 hour, we're coming up there. So this is all showing signs of a recovery. You take into account other things too. So let's look at our liquidation levels, because I know at this point in time, right, it's like it's the bottom, right? But I want to go look at the liquidation levels. So that's gonna give you an even better understanding. So for confirmation and conviction. So this is, let's say, Friday 28th at 2 in the morning. So we're going to go back to Friday 28th at 2 in the morning. We'll go to the 1 hour. Okay, it's right here. Now, let's replay. Okay, so at this point in time, we're going to go to this, let's go at the 1 minute. Whoop. Looks like there's an error. Okay, guys, it's not showing it on the lower time frames. The 15 is the lowest I can go, which is fine. I guess it's just if you go so far back in time. But let's go to the 15 minutes. So we see a huge imbalance. So you look at the liquidations, right? These are a mix of the 125 and 50 Xers, right? Everybody's trying to short this. So you look below us, right? What is there below us? There's none. This is a huge imbalance. So everybody and their mom with high leverage is only shorting. No one's longing. Everybody's shorting, right? And I'm sure if you look on the larger liquidation zones from the heat map, I'm sure there's it was in the multi-billions. Like I bet the move went up here was probably 2, 3, 4 billion in liquidations. But huge imbalance here. Now let's look at the larger time frames. It's very rare you see an imbalance like this on these larger time frames. Maybe on the 1 minute, 5 minute, but like even the 15 minute like that, very rare. So look, 30 minute. Again, you're talking like literally a very small group of people, right? When you start seeing imbalances like this, who do you think's gonna lose? Do you think um, Joe and Sally are going to lose, or do you think all these people are going to lose? What do you think the interest is to drive price? So, like I said, you're going to use other confirmations, but it'd be interesting to see what this looked like on the lower time frames. But yeah, so when you factor in your momentum and everything else, like the liquidations, your market structure, and other confirmations, you can get you can figure out you can get the odds in your favor to get a good setup for a trade. I'm curious. I'm gonna go at this point in time. So this is the 28th at 10. Man, this is gonna be a long video, but I just rather, yeah, this is very unique lesson or breakdown because a lot of people don't look at the RSI and stochastic RSI like this, so it's just from a lot of experience. So I just want to break it down as much as I can. All right, I just want to look at those liquidation levels to see what it looked like once we got the pop a little bit afterwards. So right around here. All right, let's see how liquidation levels are looking for these. Okay, yeah, see, so up here, you see that there's more people now trying to long this, right? When we're all the way down here, everybody was scared, right? This is still an imbalance, but it's much better than what it was when we were down here. So yeah, guys. All right, guys, so momentum over predicting, right? We want to react and not predict. So this is why I favor momentum. Here's the overall takeaway. Divergence is a prediction tool. This is why I don't use the RSI for divergence. I use the RSI for momentum as a confirmation tool. In crypto, don't try to guess when the trend ends. Instead, find the trend, get in it, and trade with the trend. That's the best I could give for any beginner to intermediate traders. I even see often very experienced traders, this is where they run into problems, is when they get confident, they get very experienced, and they try to trade a lot harder instead of just trading smarter. They try to time these reversals and these strong trends in crypto, which is just, you're trading on like extra hard mode. It's not necessary. You want to trade with the trend and wait for momentum to show strength or exhaustion and trade accordingly. So again, find the trend, you get in, and when momentum starts showing weakness or signs of slowing down, you de-risk, you take profit, and you wait to see if the trend resumes to show more strength or if the trend breaks. The last thing is divergence might work in slow markets, but this is crypto. Crypto is super volatile, super manipulative. That's why the market maker pattern in trading works. This is why I trade momentum. This is why I trade the liquidation zones. And this is why I favor momentum. Last thing, guys, if you felt you learned and were able to take anything valuable away from this video, please like and subscribe. I trade live in Phoenix. If you want to be notified when I trade live right here on YouTube, hit that notification bell. Also, Phoenix is my go-to exchange to trade. I've had nothing but great experiences. They are always offering bonuses from time to time. So feel free to check the link in the description below if you're interested in trading on Phoenix. And for future videos, I'll be making more lessons. For the final video, I'm going to take away everything I've learned from all these lessons and just go over a few trade setups utilizing everything together so you can see how I enter and set up my trades. All right, thanks.